Did you know there's a major tax increase coming in 2026? If you're single and have a net worth of $7 million or more, or if you're married and you have a combined net worth between you and your spouse of over $14 million, this tax increase could be significant for you, and you really should think about planning to avoid the increase in 2026. What's happened is in 2017, the lifetime exemption for the estate tax increased from 5 million to 10 million, and now it's at about 13 million. Eventually, though, after 2025, it's going to go back down to its original level. So if your estate is more than 7 million, again, for individuals, or 14 million for married folks, then you're going to have a potentially taxable at 45% federal tax rate. So what you want to consider doing between now and 2026 is, are you able to use some of the current high exemption amount to transfer funds to your children and or grandchildren in the next couple of years, and then you will have permanently gotten some tax benefit by reducing your estate before the lower exemption and a higher tax rate kicks in 2026. Now you may be saying, hey, it's only 2023, I've got time to work on this. And yes, you do, and that's why we're talking about it today, because these decisions are complex and they involve time and really deliberate consideration, because you're talking about giving away large sums of money potentially to children and grandchildren irrevocably, so you won't be able to get it back. Plus, if you're looking for CPA and or attorney help in 2025, it's the kind of situation where people may be already overbooked because everybody else is now thinking about getting in line and taking advantage of this before 2026 comes around. So it's never too early to start thinking about your estate, especially if you're a high net worth taxpayer that we're talking about, and keep going with planning for that over the next couple of years. And I know that because a couple of years ago, there was some potential change to the estate tax law. And by middle of the year, I had attorneys tell me I can't take on any more clients for estate planning for this year. We're already overbooked. And I know that's going to happen again, and probably even worse, because if you're talking 45% estate rate on, let's say you've got a $28 million estate, and today you're fully exempt. If it goes to 14 million in 2026, you've got 14 million taxable at 45%. So you're talking over 6 million tax, and that's a lot of incentive to get something done. So if you like these videos, please click on the subscribe button, and I'll talk to you next time. Have a great day.